Hello, I hope that you all can hear me. Uh, Good evening, everyone. Can you hear me? All right, good. Okay, very good. Uh, Today is the final day, and no assignment for you. Continuous assessment, there is no continuous assessment for you. 100 marks will be allocated for the final exam. Uh, the final paper 100 marks. No midterm or whatever, no assessments. Today we will discuss what do you call management accounting in public sector. Uh, yes. So I would like to share the document with you. So I hope that you can see the document. Now this is the chapter basically which we are going to discuss. I'm not going to share you any PowerPoint. So the learning outcomes are given. You are expected to read this material. It's not a big thing. It's a 4 or 5 page document. Now, when you look at public sector management accounting, so in public sector management accounting, you know, the application of public sector management accounting, there are no big complex or the, the much tools in public sector. If you go back the look at the history, but with this new public sector reforms, we call it new public management, NPM, new public management. So in this new public management reforms or the strategies, people tend to introduce management accounting techniques for public sector with this adoption of public sector reforms. Public sector reforms means the new public management means you know, efforts taken to improve the accountability plus the adaptation of private sector management style into public sector. So when you take organizations, people argue that there is no difference between organization in private sector and public sector. So thereby management styles which have been adopted in which really adopted in private sector easily copied to the public sector. So that is the main idea. So that is coming under the new public management. Really, this new public management started in Margaret Thatcher's time in UK, just to restructure the UK public sector organizations, just to move away from welfare orientation to the market-based orientation. Thereby, when you look at the public sector management or new public management or public sector reforms, it in a way trying to make competition, bring the competition to the public sector organization also. But we know in certain cases, for certain sectors, very difficult to make it competitive. But in Sri Lanka, if you look at, there are certain industries, for example, education, the health sector, electricity sector. So they have created a certain background which encourage competition. So this is the interaction. In this context, the public sector organizations may introduce different management accounting techniques just to support these public sector reforms. So our today's effort is to discuss few management accounting techniques with you with reference to the new public management. Now, if you go to this particular chapter, the first line, in recent years, many countries have embarked on a wide range of financial and administrative reforms. That is the public sector reforms. So when you look at these reforms, has two themes, two perspective, two objectives, those which concentrate on the management control system by improving the information provided by the accounting system, by clarifying roles and responsibilities, and creating accountability. Now, in a way, with this new public sector reforms, the concentrate on improving management controls. Thereby, you are providing, update informations. And when you provide the information, you should introduce very good accounting information system, maybe financial accounting, maybe cost accounting, maybe management accounting. And also it will increase the accountability. On the other hand, the second perspective is for sharing stability of the economy by exposing public sector to competition. One side, we want to improve the internal mechanism by highlighting, by enhancing the management control system. On the other hand, the sector needs to, I would say, modify, or sector needs to open for competition. Sector means the public sector. Two things. The two main objectives of the reforms process are to promote cultural performance and to make public sector more responsive to the needs of government by increasing the organizational accountability, by promoting efficiency and effectiveness, introducing participatory decision making, adopting customer focus. Now, when you look at this particular what do you call the sentence, so you will realize one objective is to improve the performance of public sector. So thereby, that's why you may look at in certain organizations, most of the public sector organization, when you visit, they have a vision and mission statement. Whatever the public sector organization, mission statement. When you have mission statement, that means you are adopting the corporate plan. When you have the corporate plan, you know the meaning of corporate plan, strategic plan. So when you have the corporate plan, you may have annual targets, annual goals, and so you have to see whether the goals have been achieved or not. In certain cases, you may keep the KPIs, key performance indicators. That means when you have key performance indicators, so key performance indicators are really expected targets from various perspectives. Now, at the end of the year, you can compare whether these KPIs been achieved or not. So what I want to communicate to you is that, in a way, public sector reforms encourage culture of performance. And on the other hand, make the public sector more responsive to needs of government by increasing organization. So the accountability increase by promoting efficiency and effectiveness. You know the meaning of efficiency. Efficiency means you do the task without wasting resources, and you are trying to achieve the objective is effectiveness. And also other two things, participative decision making and adapting customer focus. So in a way, uh, you want to improve the customer service. On the other hand, you are trying to implement participatory approaches, maybe participatory budgeting, maybe participatory decision making. uh, Participatory means you are trying to get the different stakeholders participate in the decision making process, like quality circles in a factory. Quality circles in a factory. So so that is the main objective. uh, then of course the financial reform agenda includes, now when you look at the financial reforms, not the administrative reforms, there are two types of reforms: financial reforms and administrative reforms. Now, administrative reforms means, structural changes, introducing new acts, you know, Order General, new acts, Audit Acts, then Inland Revenue Acts. Then in certain cases, certain organizations are really, computerized. For example, RAMIS, ITMIS, e-governance, IT system in RMB, which is proposed, IT system in the custom, excise department. So there are in addition to administrative reforms, we may talk about the financial reforms. Now, financial reforms basically include such things: financial reporting. You are trying to improve the financial reporting aspect. Introducing accounting standards and accrual counting, and also full cost pricing. I think you can remember full cost pricing in last 2-3 years. We discussed the pricing formula for oil. Full cost pricing formula. Purchaser provider agreements, and assets management, updating and valuing assets, and entering into the books. So assets management. The administrative reforms encompass but not limited to structural reforms, labor reforms, and review information system and accountability reforms. These reforms are centered on new public management. So what this para says that when you look at the new public management, it has its own objective. Basically, there are two objectives, as I told you. The one is, performance culture. Other one is increasing accountability and, efficiency, effectiveness, and allowing public sector to be more competitive and focusing customers, etc. Okay. When you introduce new public management, public sector has seen a shift in focus from adherence to formalized procedures to an emphasis on resource allocation and goal achievement. So when you look at the new public management, you are allocating resources in a logical way, resource allocations and goal achievements. When you say resource allocation, cost cutting is a crucial thing that will help. Just because of public managers, maybe a fiscal policy matter just to reduce the budget deficit. That's a different story. But when you look at the public sector organizations from micro level, that is resource allocation and goal achievement. So these are the encompass the following ideas. From management perspective, the public-private sector are not dissimilar. Therefore, should be managed on the same basis. The characteristic of new public management. So private sector all are same. So thereby you have to manage in the same way. One management style for public sector and one management style for private sector no longer applicable. Refocus process accountability for results. Focus on results, the performance. Maybe output, maybe outcome, maybe input related performance. The separation of commercial and non-commercial business activities. So can we separate the commercial and non-commercial business activities? I think you can remember we have the COPA and COPE. COPA is basically for public sector departments. COPE is basically for corporations and authorities and public sector, business oriented entities. Emphasis on improved, even if you go to the financial, the Ministry of Finance, these two has been really, there are different divisions to manage, to monitor these two type of sectors in the public organization. An emphasis on improved financial reporting and monitoring accountability. So that is another emphasis, another criteria in new public management. Right? Further, if you look at the characteristic, an increase in the contracting out of business activities using specific contracts for short-term period. Short-term period. Then mimicking the private sector management practices such as introduction of corporate plan, mission statement, strategic plans, which I explained earlier. Shifting preference from non-monetary incentive to monetary incentives in public sector. Earlier it was no, we are working for the government and public servants and always, non-monetary matters was crucial. But now it's returning, now converting, so by giving monetary incentives. I think you can remember to go to the RMV. So there you have the monetary incentive systems. If you go to the passport office, monetary incentive systems are there. And emphasis on cost cutting and efficiency, as I told you. Emphasis on cost cutting, cost control. So those are the public sector, new public management emphasis or the characteristics or the, I would say, rather the expectation of new public management. I think it's clear. Then so far what we did was we discussed basically what is new public management and the expectation and the encompasses the characteristics of new public management we discussed. Now what we will do is we will look at the environment in which the public sector organizations really perform. So like business environment, we can discuss the business environment for public sector. Now when you look at it, social, economic and technological pressures are forcing government to become more effective and efficient, accountable in their use of public generated funds. Since we are using publicly generated funds, the pressure is coming from the community, from media, and also economic factors and technological factors. So those factors are influencing for government to become more effective, efficient, and accountable. There is a pressure. So people are really nowadays not ready to wait in queues, and they have some other. They have their smartphones, and if something happen in public sector organized, they just take a photograph and put it to the Facebook. The social pressure. Is it clear? And you have to remember, not like private sector organization, you have to remember all public sector organizations are visible. Publicly, the information is available for the public, visible to the public. When something happen in private sector, it's not open for the media. We don't know what is happening in private sector. But in public sector, whatever happened, whether bad or good thing, so next day morning, it's in the publicly available information. So thereby, what I want to communicate to you is that social, economic, technological pressures are coming. Now when you look at even this COVID period, for example, you can remember the first case when distributing 5,000. We don't have a database to distribute 5,000. So if we had a very good system, information system about the people, citizens in the country, their income, their age level, family members, etc. I think it's easy to distribute this particular subsidies in such situation. Technological pressure, and people really now asking more. Even if you go to now public sector banks, fully automated, not in lending but in depositing, withdrawal, in that sense. Even public sector organizations automated. I don't think certain public sector banks are really fully automated with regard to the lending. But of course, I think deposits and withdrawal, in a case, yes. Economic factors, we have a per capita income very low, and our economic indicators are not good. We have the what you call a trade balance of payment deficit, foreign currency issue, currency is devaluating, our budget deficit is always negative, current account balance is always negative. So economic factors are, and also the country's debt ratio when compared with the GDP, all these factors are negative. So thereby, there is an economic pressure for us to be more efficient with regard to the public funds. And in a way, World Bank is pressurizing, and also IMF and certain other donor countries, donor agencies. So thereby, government organizations are really subject under pressure. Claim that government are under pressure from the increased globalization, dissatisfaction citizen with the current management, and curtained budget spending. Miller contend that there are 6 key forces driving the change in the public sector, including the politics. So these are the environment factors, and also the globalization aspect, not only the technology, dissatisfaction of the citizen with the current management. There is a general claim against public sector that they are inefficient. There is a general claim against the public sector from the public. Public itself criticize, media criticizes public sector organizations and budgeting spending. And Mellers 1995 identified factors changing attitudes to the role of government in the economy. Now, role of the economy in respect of government. So we change. Now we feel that government should not undertake any profit-making ventures. So thereby, those ventures has to be have to be privatized. Can you remember? So there is such argument, and certain activities has to be outsources. So you can remember the Colombo Harbour story, outsourcing and renting. The process of microeconomic reforms, micro changes in certain organizations. Certain organizations are combined, certain organizations are privatized, certain organizations run by the private sector management, etc. And changing community on business expectations and communities expectations, citizen expectations and business expectations now changing. Resource constraints, there are resource problems, capabilities and human resources, IT resources, etc. And the impact of technology. The technology plays a critical role for public sector organization to change and demand for greater accountability. With this Pope, I think, committee and the Bond case, and people demand more for greater accountability. So these are the factors which influence public sector organization to change according to the Mellers 1995. Different people look at from different factors. Here, this chapter says, now, for example, Rilvin and Sansom and Wensin claim that governments are under pressure. They are having a different view, and this Meller has a different view, but they are all focusing that there are forces for government sector to change. Then we will come to the implementations of public sector reforms for counting. Government reforms have had substantial implication for accounting. Traditional accounting, when you say traditional accounting, you have just, you focus on inputs and you control the expenditure. You have the expenditure, budgeted items, the inputs, expenses. Again, that is line by line. You have administration cost, you may have the salary cost, you may have the rent cost, you may have some other, welfare cost, etc. You may have different cost items, just like our traditional budget, and you compare with these budgeted figures with actuals. That is what we did in public sector, the control management accounting. That's called traditional accounting, nothing else. We had estimated or the budgeted figures and we compare with the actuals. We always try to focus on the budget ceiling. We are not spending more than the budget. That is the traditional accounting system in public sector. All the department heads, secretaries and directors in public sector organizations, they are trying to be with the budget. They are not spending more than the budget. They are not spending more than the budget. And also, they know that their controlling point is people will compare budgeted information with actuals. So thereby, their controlling tool was the budget, traditional accounting. Now, when you look at this further, if you have any question, you just put to the chat box. inputs, the reforms of the public sector has changed traditional role of accounting to one that focus on accountability and efficient allocation of resources. So this traditional accounting has changed. Traditional budgeting versus actual comparison has changed. This implies that accounting could concentrate upon output performance measurements, efficiency, cost saving, and productivity and performance measurements. We are now focusing on outputs. We focus on performance measurements, efficiency, cost saving, productivity, and performance measurement. Cost saving means you are eliminating non-value adding activities, unnecessary activities. So for that, to improve the performance measurements, to improve the output focus measurements, to improve the productivity, so you can't apply the traditional budgeting system. You need little bit, you need more broader new management accounting, new accounting techniques to do so. This in turn require that new accounting technologies be employed, such as new accounting technologies. You can't do it with the traditional budgeting. You need new accounting technologies. One new accounting technology is planning, programming, budgeting. It's a concept. Planning, programming, budgeting. We call PPB in public sector. PPB. And accrual accounting, instead of cash basis accounting, people now talk about accrual accounting in public sector. Even in Sri Lanka, the government is trying to introduce accrual accounting instead of cash basis. Performance indicators, KPI. If you take any annual reports in the public sector, you will see the KPI, performance indicators, and you compare the indicator. Now, when you say performance indicator, it's not only from the financial perspective. You bring the non-financial perspective also. Maybe number of complaints, maybe number of connection. For example, exit board number of connection. Water board number of connection. Revenue per employee. The non-revenue water percentage. Delivery time. Time taken to deliver the particular service. So likewise, you may have different performance indicators, KPIs. Reason for this is the inconsistencies between measuring the full cost of a program. Indicators. Annual reporting mechanism. The following sections discuss some of these new management accounting techniques. Then again, annual report mechanism, not like traditional annual account. I think in public sector, if you look at in the in private sector, there is an annual report competition that, of course, which is conducted by the CS Sri Lanka. Likewise, in public sector also, now there is an annual report competition. Annual report competition you may have with central government, annual reports competition for provinces, annual report. So annual reports for local authorities. Local authority means municipalities and the urban council and Pradesi Sabha. Local. There are three level of administration in the country. First, we have the central government, parliament. Yesterday, 20 amendments was really, approved with the majority. The parliament, that is national level administration, and you have the Palas Sabha, that's called 9 provinces. Each province is its own mechanism, council, and the next level is local authority. Local authority means අපි ඒවට කියන්නේ පළාත් පාලන ආයතන. Local authorities means all the municipals, කොළඹ නගර සභාව, නේ, කළුතර, ගල්කිස්ස, දෙහිවල, your area may have a municipal or the urban council. මහනගර සභා සහ නගර සභා. then ප්‍රාදේශීය සභා. ප්‍රාදේශ සභා කියනවනේ ගම් මට්ටමේ තියෙන ගමේ තියෙන එක තමයි ප්‍රාදේශ සභා. yes. okay. So what I want to communicate, annual reporting. Now you can understand what I want to communicate to you is that instead of traditional accounting, just because of these public sector reforms, in the public sector, you will be able to identify new accounting technologies, maybe participatory budgeting, zero-based budgeting, planning, programming, budgeting, accrual accounting, balance scorecard applications, KPI based performance. Now Inland Revenue, they are going to introduce the KPI based rewarding system. Okay. So annual reports, what I want to communicate to is that when you are trying to manage in a different way, so your accounting system also has to be changed. But what we are going to do is, as per this text, we are going to discuss few accounting technologies. I'm not going to discuss this in details, but I will discuss it in brief. Okay. I think you know accrual accounting. No need of explaining technically what the accrual is. You know accrual. But when you look at the accrual accounting, so it provides full set of complete information. That's the argument. Accrual accounting is providing full complete set of information. Why it's helpful you to make, you know, decisions, analysis of cost, full cost approach, etc. So you will see the advantages or the plus point of the accrual accounting in this para. If you read. Okay. Then this para is talking about the limitations of accrual accounting. So limitation may be, you know, inadequate disclosure, you know, size of assets, reduce of etc. You may have different weaknesses in accrual accounting. Please read these two. The introduction of accrual accounting in the public sector requires changes in existing information techniques. This means that considerable amount of money have to be invested in changing the management account system so that it can produce accrual reports and either training or recruiting individuals to support new accrual management accounting system. Accrual budget refers to the preparation of budget according to accrual concepts. Now, when you look at the accrual concept, you can look at accrual accounting from financial statements. So that is financial statement you prepare for the past period. And also you can look at the accrual budgeting. Then your budget is accrual. When your budget is cash, what is the limitation? You can't spend more than the budget, because when you are given 100 rupees in the budget, your limitation is 100 rupees. You can't spend more than that. So thereby, in the public sector organizations, one barrier to go accrual budgeting just because of this budget deficit issue. If you go for accrual budgeting, what will happen to the budget deficit? Increase. But when you have the cash basis, your budget is according to your income. So thereby you tend to, you know, limit your budget deficit. So thereby there is a there is a conflict. Even though public sector organization needs to move towards the accrual-based budgeting, political executives may not prefer to adopt accrual budgeting because of the macroeconomic issues in relation to the budget deficits, money supply. But it's a different story. I don't have any objective to discuss that aspect. What I want to communicate to you is that the accrual accounting, you talk about the accrual budgeting also. Is it clear? Right. But here this para says that when you move from cash basis to accrual accounting, you have to invest. You have to bring new technology. Technology means IT. I think in the public sector now, SIGAS is there. SIGAS is the IT system, computer system, which is prepared based on, that system is based on cash basis. SIGAS. SIGAS is cash basis. Now, if the country needs, Sri Lanka needs to move to the accrual accounting, you need a new system, new software. I think in a way it means integrated information management information system. It's a new software. So this new software is bringing accrual accounting, but this project is not successful. One of our students is doing a research on this area. It means the project is not successful just due to many reasons. We don't know the reasons. But what we are trying to, the author's expectation by writing this paragraph, if you trying to invest accrual, you need money, you need resources, you have to improve, you have to train the people, you have to develop the human resources, etc. Okay, the accrual budgeting accrual budgeting refers to the preparation of budgets according to accrual concept. Guthrie, one particular academic, famous one in the public sector accounting, suggests that the primary reason for this is the inconsistency between measuring the full cost of a program inflated accrual terms when the cash allocated by governments in smaller absolute dollars amount. Organizations prepare operating budgets, capital budgets, budget cash flows, and budget statements of assets and liabilities using accrual paper. When you have the accrual budgeting, you have the budgeted financial statement, budgeted assets, budgeted liabilities. But in Sri Lanka, we don't have budgeted cash flow, etc. In addition to the common use revenue budgeting, some public sector entities also make use of the following management control techniques. In addition to the revenue budgeting, planning, programming, budgeting system, the meaning is this PPBS, what is this? Planning, programming, budgeting system attempts to link together plans, objectives, and environment in which the organization is working and feedback from control information. Your plans, objective, environment, you consider the environment in which the organization is working and feedback from control information. You get the feedback. So this was introduced by the USA president about 1965, long ago. Public sector accounting literature discuss the following key objectives of PPB. These are the objectives. Careful identification, examination, goal, objectives in each area of government activity. You prepare the budget based on PPB, means you consider the objectives and Based on that, you identify the activity. It's somewhat related to the activity-based costing, activity-based budgeting. So all the activities are justified. You perform whatever the activity to achieve a particular objective. No activity without any purpose in the government sector. That's the meaning of planning, programming, budgeting. All the activities are towards directing to achieve a certain goal or objective. So thereby non-value-added activities are not performing under this budget. Analysis of the output of a given program in terms of its objective. What is the objective of by performing this program activity? Measurement the total cost of a specific program, not just for 1 year, but for several years into the future. You consider the project period. The expenditure is not for 1 year. Expenditure is for the program. Expenditure is for the project, not for 1 year. The formulation of objectives and program extending beyond a single year to relate to annual budgets and longer term objectives. So thereby you consider the longer term period rather than focusing on financial year. Analysis of alternative to find out most efficient way of reaching the program objective for the least cost. So when you have the objectives, you may consider different alternative way of performing, alternative way of conducting activities. So thereby, so you consider the best alternative. You try to introduce the best way of performing, the best way of achieving the desired or the expected outcome. So thereby, you are trying to ensure the productivity, efficiency, and effectiveness. So when you look at this planning, programming, budgeting, the concept behind this particular accounting technology means the discourse, the particular budgeting. So this type of budgeting is focusing to improve efficiency, effectiveness, and also economy. To establish analytical procedures serve as a systematic part of the budget review process. You are reviewing, monitoring, corrective actions. So thereby you plan well, implement well, and monitor, and you learn. So thereby planning and programming budgeting is making your organizations a learning organization, a monitoring organization, which is required because environment is changing. There is a possibility of going wrong, and so this will facilitate for you to really always continuously get the feedback. Now, other one is zero-based budgeting, other technology. Zero-based budgeting is a technique whereby the total cost is plus increment. For every item included in the proposed budget must be justified and approved. This is also aligned with the program planning, program budgeting. But this budgeting means no item in the budget, all the items you justify. So when you look at the traditional budgeting, what happens is you look at the last year budget and just increase 5%, 10% for this year. Same item, you put just copy the same item, line item, and just put the figures. That's called incremental budgeting. So when you use the traditional budgeting or the incremental budgeting, what happened? You are trying to carry forward the last year inefficiencies, because last year items you are brought in. What you are doing is you are just increasing or decreasing by a particular percentage or by a particular amount. Zero-based budgeting is this guideline. So you forget about the last year. You look at the future, what you are going to do, and identify the activities, and you justify those activities and make allocation. So it's a kind of resource allocation. Now when you look at this planning, programming, budgeting system and zero-based budgeting, it's a really new way of allocating resources, rational way of allocating resources. So when you look at the traditional budgeting, the resource allocation is there, but it's not rational. Comparatively, what I'm trying to say is this new technology is allocating resources in a rational manner. It suggests that no base minimum expenditure level should be accepted. Well, for any activity, resources are not necessarily be allocated. Same thing. So the advantages of zero-based budgeting you will be discussing. It allocates resources according to priorities between the essential and the less essentials. You can prioritize. It improves the decision making because allocation is related to the objective. It makes managers plan ahead, defend their budgets. There is a rationality for the budget. Thereby, it increases the greater feeling of ownership of those budgets. When you prepare a budget like that, it feels that it's your baby. So thereby, you tend to motivate to implement. Problem is it's time consuming, and it's time consuming exercise. It is impossible to appraise all the activities each year. It is impossible legislative and political reasons. The political, you can't play less politics with zero-based budget. With traditional budgeting, you can play more politics. Thereby, politicians, those who play politics in organizations, may not encourage zero-based budgeting. It generates a mass information that cannot be adequately assimilated by decision makers. Generate mass. So you to prepare the zero-based budgeting, you should have a helicopter view. You need more information. You can't just prepare zero-based budgeting by having manual systems in your organizations. To prepare zero-based budgeting, of course, you need a very good information system. So thereby, if it is not there, implementation zero-based budgeting is a barrier. Then the budgetary accounting, I think that's the last technology, budgetary accounting. Budgetary accounting includes both budgeted and actual amounts within the double entry system. Using budgetary accounting, budget reports for all departments are prepared prior to commence of the reporting period, and budgeted reports are then compared with the actual reports for the period. Then variances between two established and variance reports. It's a kind of budgeting accounting. So if you have a very good system, you can get the reports. You can compare it with actuals and variances, and you can discuss the variances. Budgeted amounts are credited to the appropriate accounts. Then, as the expense incurred debits are against these credits, the results in balance that represent the amount that the budget still unspent. So unspent amount, likewise, you can identify. So the one way is budgetary accounts. So I have discussed. So what you have to do is you have to read this little bit. I didn't discuss 2-3 places. You have to read it and understand. So I leave it for you because I know I want you to read this document, but it's not a big thing. You have to read this very. You have to read and understand. So hope that. You will understand this. So what I will do is I will stop the recording this one.